You know, lost in the sauce of the stock market's health and everything else is what has been happening to interest rates. This could explain why that little girl behind me is raising her hand, because now they have hit an all-time low. A 10-year note was trading in and out at 2%. That roughly translates into four-something 30-year mortgages, 4.22% today. I want you to think about that, because interest rates, mortgage rates really have never, ever been lower since we've been using these sort of traditional instruments. So what's the deal? Why aren't people taking advantage of that? Can't they take advantage of that? Chip Cummings joins us out of Grand Rapids, Michigan. He's a big real estate expert. Chip, you know, it's the gift that keeps giving, and yet no one is taking it at all. Why?
That's true, Neil. You know, it's funny. You and I were talking about this months ago. How low can it go? It really comes down to jobs. You know, we've seen the numbers now, and nobody's real excited about it. But without jobs, you can't get the economy going. We can't get credit issued and get money out there to buy these houses. You know, we've got a glut of these houses out there. It's never been a better time to buy. But you're right. We have no takers out there, and it's a problem.
What happens now that these banks are being sued by the same housing finance agency that oversees the likes of Fannie and Freddie? Never mind the pot calling the kettle black on that one. The fact that the banks now, 17 of them strong, are going to be under this cloud for a while. Do they stop lending? Is there a freeze on lending? Is there just a freeze in activity, period? What?
Well, I don't think it's not going to be a freeze on lending. It's obviously going to be an ugly situation for a while, and ultimately the consumers are going to pay. You know, the banks are going to get their money reimbursed somehow in these fees, and how it all shakes out with the housing agency is anybody's guess. But it is going to keep the downward pressure on these rates, because these banks have to lend money or they don't make any money. So I think that it's safe to say that, again, I don't think you and I thought we'd live this long to see this.
No.
But we're still gonna see them going down. There's that downward pressure.
Now, you mentioned something interesting, as you always do when you come on the show, and that is it really will come down to jobs. So no matter how low rates go, no matter what other things we're seeing, if we don't see jobs materializing, that's the underpinning of confidence. We're not seeing those jobs materialize, so now what?
Well, that's it, Neil, because without money from a job, they can't pay the mortgage. And without the mortgage, we can't get the house. And without the house, I mean, everything grinds to a halt. So there's a lot of expectations on the president's job plan. But as you can see, Wall Street just doesn't have much confidence in it right now because of the way things are shaking out. And, you know, you and I don't go back quite this far, but you remember in the 60s when they did this Operation Twist. And we're expecting that in September to keep this pressure on a downward spiral on these yields. So I don't know. It's anybody's guess how low this is going to go.
Amazing. Chip, thank you very much, buddy. I appreciate it.